costs can sneak up on buyers and often add thousands of dollars to the price of purchasing a home. But the good news? There are plenty of programs that can help cover these costs. In this video, we'll break down what closing cost assistance is, how it works, where you can find it, and how to know if you qualify. What exactly is closing cost assistance? Closing cost assistance is financial support that helps cover the upfront fees tied to finalizing a home loan. These costs can range from a few $1,000s to more than 5% of the home's purchase price, depending on the market. Assistance often comes bundled with down payment aid, but you can use it specifically for things like lender origination fees, appraisal, title search, or escrow charges. The purpose is to make buying a home more accessible, especially for first-time or lower-income buyers who might have the monthly income to afford a mortgage, but not enough savings to handle both the down payment and closing costs. How does closing cost assistance typically work? Closing cost assistance comes in a variety of forms, each with its own rules. For example, grants provide free money that never needs to be repaid. These are often targeted at first-time buyers or those meeting specific income requirements. Forgivable loans act like a second mortgage at first, but after a certain period, often 3 to 5 years, the loan balance is erased, provided that you stayed in the home. Low or no interest loans give you extra time to pay closing costs back gradually without adding much extra burden. Deferred payment loans don't require monthly payments. Instead, repayment is triggered only if you sell, refinance, or pay off your first mortgage. Matched savings programs encourage you to save for your costs, then match the amount you've saved, effectively doubling your efforts. Lender credits can reduce upfront costs, though the trade-off is usually a slightly higher mortgage rate. Seller contributions are another avenue. Sometimes a motivated seller will agree to cover part of the closing costs to sweeten the deal. So assistance isn't one size fits all. Some options reduce your costs permanently, while others delay repayment until later. Who offers closing cost assistance and where should I look? There are multiple places to find help. State Housing Finance Agencies, HFAs, often administer the most widely used programs, offering grants or loans with flexible terms. On the federal level, FHA, VA, and USDA loans sometimes include options for reduced or covered closing costs, and HUD partners with state and local organizations to extend additional aid. Beyond government, nonprofit organizations and private lenders also step in with assistance, often targeting specific groups like veterans, first responders, or educators. Even your real estate agent and lender can be valuable resources. They know which programs are active in your area and may be able to negotiate seller contributions directly into your purchase contract. Who qualifies for closing cost assistance? Eligibility depends on the program, but some common rules include income limits, which is tied to your area's median income. For example, many programs require you to earn at or below 80% of the median household income in your county. Credit score minimums, typically starting at 620 to 640, though some programs may require higher scores. Property rules, such as purchase price caps or requirements that the home be your primary residence. First-time buyer status in some cases, though you may still qualify as a first-time buyer if you haven't owned a home in the last 3 years. Homebuyer education courses, which teach financial literacy and the responsibilities of homeownership, are often mandatory. Residency requirements, since you'll need to be a U.S. citizen or legal resident and prove it with tax returns, pay stubs, and other documents. In short, programs are designed to help responsible buyers who might otherwise struggle with upfront costs. How can I improve my chances of qualifying? There are several steps buyers can take. Strengthen your credit score by paying bills on time, reducing debt, and checking your credit report for errors. Getting pre-approved for a mortgage also shows you're ready to buy, which some programs prefer. It also helps to keep a modest amount of savings on hand, even if the program covers most of the cost. You may still need to contribute a portion. Research local and state programs early because funds are limited and often distributed on a first-come, first-served basis. Another smart move? Work with a HUD-approved housing counselor. They not only guide you through budgeting and paperwork, but also know the specific programs available in your area. Finally, keep your financial life stable. No big purchases or job changes while you're applying. When should I apply for closing cost assistance? As early as possible. Many programs operate with limited funding, and once those funds are gone, you'll have to wait until the next cycle. Applying early also gives you time to complete education courses, gather documents, and coordinate the timing with your mortgage approval and closing process. In short, don't wait until you're ready to close. Start exploring options the moment you begin house hunting. Closing costs don't have to be a deal breaker. With the right program, you can save thousands and step into homeownership with more confidence. Just remember, start early, ask questions, and lean on the resources available in your state and community.